Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Monday, September 18th, 2006, and the market's just closed. I've got the Nasdaq 100 Trust on the screen right now. Let's go ahead and take a look at today's action. I stated last Friday that I've been expecting that now that the market has had a nice rally last week, that we probably ought to digest these gains. We're at a very critical area, I think, because it's right here at this 200-day moving average. We can see it just closed right on it here today. And if we go back to the weekly time frame, this level takes on a lot more significance because of this prior support here earlier in the year, but also prior resistance late 2004, early 2005. And then, of course, we can also draw in this Fibonacci that we have been drawing off this high here to that level, which gives us just about a 2/3 retracement. And why draw Fibonacci off this level rather than this level? Because this is where the main thrust of the down move occurred. However, if we measure it off of this high too, you're going to see that it occurs approximately the same area, give or take a few pennies. So whether we're right in drawing it in, off the April highs versus the January highs, I think is pretty irrelevant because it's not a trading system per se, but rather just a place where we ought to consider the fact that buyers are probably going to slow down their activities and sellers may start to take some profits and shorts may start thinking, hey, let's turn this prior support into resistance. Let's make it a self-fulfilling prophecy. Jury's still out. It's much too early to tell. We'll know in hindsight, of course, as always, but because we are at this critical level after seeing such a nice rally last week in the market, it just makes a lot of sense to slow down in here and kind of wait for a little bit more evidence from the market. We do have the Federal Reserve. They've got a 2-day meeting, so Wednesday afternoon at 2:15 Eastern, they will announce any changes or lack of changes to monetary policy. And, most people are expecting another day of inactivity tomorrow based on that. I found a lot of times right before the Fed, we actually get a surprise move. So tomorrow we might get a surprise move, and I'm not going to bet either way at this point. I'll wait for evidence tomorrow, but I'm not going to say which way I think that can go. Again, though, we do have on this 10-minute time frame for the Qs, we have these lower highs and now lower low. However, we've got this rising 5-day moving average that potentially acts as support. So again, telling us more reasons to be neutral in here right now for the Qs. And if we look at a 5-day chart, we can see that 5-day moving average right in here. So it holds above that 5-day moving average, but we are starting to see evidence of churn a little bit. And by that I mean just indecision, because we've got these moving averages crisscrossing, and that occurs where there's indecision. Looking at the 1-minute chart for today in the Nasdaq 100, you can see the sellers did take control here. It spent the afternoon below the VWAP, so the average person who bought today is losing money. It doesn't mean that everyone is, but the average price that the Qs traded hands at today was about $40.18. So with the market 7 cents below there, the majority of the volume occurred at higher levels. That's the way you want to look at that. Looking at the SPY, we can see in here that the market is approaching these multi-year highs. A lot of people are expecting that high to get hit. After the market has made such a strong advance, I would think that if the market does break out to a new multi-year high here, that it'll most likely be met with some pretty significant selling that traps buyers in up there. You got to be wondering who's left to be buying up in this area after the market's already experienced such a strong rally as it has here over the last 2 months. So just again, more reason to be cautious in this area. On the 10-minute time frame, we can see that we're starting to see this range in here, this range-bound trading, and let's just go ahead and move that actually to that range is probably about 131.65 up to 132.50. Again, we've got the stock, or the S&P 500, that is. We're finding, searching for support right here at the rising 5-day moving average. Looking at a 5-minute time frame, we can see that a little bit more clearly. and we've just got a whole bunch of, pretty much nothing going on in here right now as this market consolidates the recent gains. The bullish scenario is, hey, it's not giving back its gain. The bearish scenario is maybe this is distribution before decline. We'll know when it breaks this range. I think really below 130, 155 is where I would start to think maybe we get an opportunity for some short sales in here against the primary trend, though, so it would be a short-term trade only. Until a lack of stops, that is a lack of us getting stopped out, allows us to transition it into something bigger. But again, the 50-day moving average is still advancing. Generally, this market, I'm going to consider it innocent till proven guilty. Semiconductor holders, SMH, we see more churn here below the declining 200-day moving average. And that 200-day moving average is declining. So this market's seen a very nice rally from 29 to 35. We've started getting bullish on it over in here once it held this prior level of resistance right in there. It found support at the 10, then the 20. It rallied up last week, and now we've got the same thing going on here, a range-bound market. That range is pretty much going to be defined at this point, I think, by 34.15 up to about $35 a share. And the market's telling us that right now it's indecisive as far as what the trend is. So it's going to remain a stock picker's environment, and that's where you're going to be finding your opportunities on an individual basis, on a case-by-case stock basis. The IWM, that's the Russell 2000 here, popped up above this I guess that's not the June 2nd high here, but here's the June 2nd high we've been watching on the Nasdaq 100. But it popped up above this late June high. Now it's back down below it. There's no reason for concern yet in here. The 10-minute time frame, more of the same thing. Breaking below 72.05 or so, I think, puts the sellers back in control short term. And as far as the uptrend goes, I think you just have to see a little bit more consolidation before you can get too aggressive on the long side. The market needs to either correct these gains a little bit further through time, as it has so far, or experience a little bit more pullback and then stabilize before we can really think about buying it aggressively. Let's go ahead and take a look at the stocks that I had mentioned recently. And we didn't have any open positions as of Fridays, based on the stocks that I had mentioned there. So for today, I had mentioned BRLI. I said that what we were looking for in BRLI was an initial pullback to 23.45. We got a gap higher instead. When they gap higher like this, and I'm looking for a pullback, when they do pull back, I generally don't trust them. However, if you did buy it at after the pullback to 24.35, and let's take a look at a shorter term time frame. 24.35 occurred right here. So once it got down to 24.35, we weren't going to buy it at that point. Instead, we were going to buy it back above 24.50. That occurred right here. That looked like a good buy point. However, again, officially, I'm going to say no entry in this trade. Our stop was then to go at about 24.30, which is right here at this level. So although there's no trade in it officially, if you're in this stock, I would say put your stop, maybe a nickel below break even, because the way it gapped higher and then came in, it just seems like it's kind of churning a little bit in here. Let's see. We also were looking at STLD, and STLD was a stock that we were looking at as a potential short sale below $50.70. Obviously, that never occurred right in here for that stock, so there was no trade taken in BRLI. I'm sorry, STLD. China CDC Corp. I wanted to buy this stock. I thought it was going to get going above $5.70. This stock's starting to frustrate me now in here because I had suggested a stop below $5.58, and you can see we got below that 5.58 level, so it looks like about a 13-cent loss in China. The stock still, holds up great on a daily time frame. It's just kind of some back and forth whippy action in here right now. AZPN we were looking at as a potential short sale, and the play there was to look for a move up to $11.20, and then sell it short as it broke back down below 11.10. You can see that never occurred, so there was no reason to get involved. I'm not going to continue to update that stock. And actually, we had one other stock that I'd mentioned last week, and that was to buy last week. That was buy this Xing. And Friday I had said that, and we purchased it in here at $11.80. Friday I suggested that use any strength to get out. It looked like it was starting to slow down. Stock had a great day instead. I was wrong about that call about it slowing down. I did say sell strength, and the proper place I think to have done that would have been at daily R2 or $12.60. So had you followed my way of thinking on this stock, you should have gained about 80 cents on Xing. And I will be back later with another video. Unfortunately, I've just been given some recent legal advice. I forwarded along a few emails to an attorney that I've received, and because of that, no longer in the videos am I going to be mentioning specific entry and exit parameters. I hope this wouldn't happen, but going forward, all my stock commentary is going to be a little bit more general. I'm still going to tell you, hey, I would get out if it was below this price, or stops might go below here or there. And generally, hey, maybe you want to wait for a pullback or wait for the stock to establish some strength. But as far as specific numbers go, I'm no longer going to do that. I'm sorry about that, but a few bad emails got me nervous, and I just am not willing to take the risk going forward. So we'll see how that goes. Shoot me an email. Let me know how you think it goes when we do it, just the more general commentary. So thanks for listening, and I will be back this evening with another video.